change. President Xi Jinping has lately been making very strong speeches about the need for China to address climate change, both for domestic and for international reasons. But of course, China is one of the big at-risk countries, given a large area that's at very low levels, threatened by surges and rising sea levels, given the water crisis that also already affects large parts of northern China and is expected to get worse with changing rainfall patterns around climate change, and so on and so on. In India, we have a government that has extraordinary ambitions around clean energy and also around rail, energy efficiency and water investments. These have been laid out by the Modi government over the last 18 months, and much has been done to bring together various bodies and to provide mandates to state government banks and state institutions to deliver on the government's ambitions around infrastructure development in these areas. The Prime Minister has been clear that India will need to attract overseas capital, not just domestic capital, to be able to deliver on its mandates. Whilst there's a lot of capital in India, and in theory, the capital availability in India would be enough to deliver these mandates, unfortunately, a very large chunk of that capital is tied up in gold around the necks of Indians, a third of the world's gold, in fact, and in property of various sorts and property bubbles. We have an inadequately developed capital market for the scale of ambition required. Indian Railways, for example, has said that by the end of next year, it will need to go overseas to finance its very, very ambitious rail electrification plans. Not just rail electrification. Just to give you a flavour of what can be done when you have an activist government looking at public transport. They also have set up a special corporation to cover Indian railway stations in solar panels and the land around them. They have set up various corporations to pursue renewable energy development associated with rail, and they are undertaking a massive electrification of the rail system. They have a target internally of increasing the freight carried on Indian rail from a third of all freight in India to a half by 2025. Given the scale of growth that India is and will be experiencing in a few years, these are breathtaking targets and exactly the sort of things we need to see governments around the world doing if we are to successfully make the transition to a low carbon and climate resilient economy in time to avoid the catastrophe that climate change scientists tell us we are currently heading towards. These are domestic drivers. Now, let's get down to some concrete issues. In China so far, we've seen a fair whack of green bonds issued. Last year, we saw 2 bonds issued in overseas markets by Chinese entities. Goldwind Energy issued $161 million equivalent in the Hong Kong market, and then Agricultural Bank of China did a large $1 billion issuance in the London market, 90% USD and 10% CNY, which was extraordinarily well received. In China, in a highly regulated environment, it's actually not been possible for banks to issue labelled green bonds. The regulators have said that that will need guidance before they're allowed to do so. China Industrial Bank, for example, at the beginning of 2015, issued an asset-backed securitization around renewable energy, but they were told by the regulator they weren't allowed to call it a green bond until the government had determined the rules around it. On the 22nd of December, the People's Bank of China issued those regulations. Within 6 weeks, we'd had the following bonds issued, or within 3 months, I should say, because BAIC has just been issued. We've seen China Industrial Bank issue the equivalent of $1.5 billion in, these are all in Chinese currency. Shanghai Pudong Development Bank issued $3 billion equivalent. Bank of Qingdao issued $615 million, Century Concord Wind $31 million, and then just closed has been a bond by BAIC Motors, where the proceeds are going to electric vehicles and low emission vehicles for $384 million. So this has been quite a fillip to the global green bond market this year. Milestones in context. Well, in 2013, the first project that we also were working on to look at green finance in China started for the Development Research Center. In 2014, the People's Bank of China launched its Green Finance Task Force. And coincidentally, the first Climate Bonds Initiative paper on green bonds in China was published earlier that year. In 2015, we saw the launch of the very important Climate Bonds Initiative paper on green bonds, which was a contribution to the PBOC paper. We saw the launch of that Development Research Center Green Finance Report and then the PBOC Green Finance Task Force on Green Finance Report. These were very substantial policy interventions in the Chinese marketplace, and the reports were taken up. That's the exciting thing about this. In the 13th five-year plan that China has recently finalized, we now see a large section on green finance, which has been influenced by these reports. In December, as I mentioned, PBOC finally announced its regulations on green bonds, which broke open the dam of green bond issuance in China. In China, there are multiple regulators, around 5, covering different sectors of the potential bond issuing market. PBOC is by far the most important, regulating the interbank market, but the National Development Research Commission also provides guidelines for corporate issuance, and they issued their guidelines at the beginning of January. NAFME, another regulator, issued another association which forms a sort of guidance, provides guidance to the market under the broad direction of PBOC, issued its guidelines privately in February. We now know they are planning to publicly release those in the near future once they refine them. And we believe that CSRC, governing listed companies, will be releasing theirs later this year. In April, we saw the first index. Interestingly, this was an index of unlabeled green bonds. This looked at bonds in China that could and should be labeled green, picking up on the precedent set by the Climate Bonds Initiative report. For example, we've always said to Chinese stakeholders that China rail bonds, those that have good transparency about use of proceeds, ought to be considered green. And the CCDC and CECP index has included those in their index. We also see work underway now, the idea of developing an ETF against that index, as a way of raising awareness and bringing them into a broader financial markets. Last month, we saw the launch of Climate Bonds Initiative's 3 roadmaps of green bonds in China, available on our website. There's a lot happening. In India, we've seen in 2014 a bond which has been possibly retrospectively called green, but is certainly claimed to be green by the Indian Renewable Energy Development Agency, $75 million equivalent of green tax credit bonds. But the real breakthrough of the Indian market was Yes Bank's issuance early in 2015, when they issued 161 million of bonds. I still remember being at the Reinvest India Forum in February last year and meeting Rana Kapoor, and they were the CEO of Yes Bank, and he was saying that they were looking for 75 million, hoping for 150 million or more, and they ended up settling for 161 million, supported by the IFC, the International Development Bank, investing in 50 million equivalent of that bond. That opened the way for others. Soon after, we saw India Export-Import Bank issue an overseas bond for $500 million. I think David Raskina, who's the CFO of the India Export-Import Bank, was very pleased with the result and has said a number of times they're looking at doing more. We saw CLP India, a renewable energy company, issue a bond worth 90.3 billion equivalent in INR, that is Indian rupees. And then in December, IDBI, a development bank, issued an overseas bond, USD 350 million. This year, so far, we've seen Hero Future Energies, a renewable energy company, issue a bond in 3 tranches made up of $45 million of US, again issued in INR. The interesting thing about that bond is that they're saying that is trading at a premium in the secondary market on the back of overseas investor interest. That bodes well for possible improved pricing in future. A few milestones in India. In 2014, there was a UNEP and FICCI, Federation of Indian Chambers of Commerce and Industry, conference in Delhi, which included a green bonds seminar. I think that was probably the first time the topic had been raised in India. A number of people turned up. There was a lot of interest. We saw in 2015 the Yes Bank bond and other bonds. We've seen the Hero bond trading at a premium according to their treasury. Now, just let me tell you a little bit about this idea of trading at a premium in the secondary market. We see in Europe now reports, for example, by Barclays in a report early this year. We see reports of something between a 15 and 20 basis points premium for green bonds in the secondary market. This would seem to be because people who invest in green bonds tend to hang on to them compared to the other bonds they have that don't have a bonus feature, if you like. As a result, it's what's called a bid market. On the back of that differential that's appearing on the secondary market, where there's enough trading to find price discovery, as you say, but it's still a fairly thin market, we're seeing some pressure on primary price. That is, some portfolio managers are willing to bid a little more aggressively at the primary price. In Europe, we have a number of bonds that have, according to the treasurers involved, gained a modest price benefit as a result of that secondary market price. And that is a price benefit around 5 to 15 basis points. It's not universal, but it seems to be a trend. That's what we would expect to see in a reasonably liquid market where secondary market price discovery can be found. And we do expect that to play out in other markets over time. The final thing I'd say is that on the 30th of June, the Climate Bonds Initiative with a number of partners, such as the Principles for Responsible Investment, the International Cooperative Mutual Insurers Federation, the UNEP Inquiry, the Design of a Sustainable Financial Market, and the Long-Term Infrastructure Investors Association, will be holding a Green Infrastructure Investment Coalition roundtable in London for Indian banks and infrastructure developers to meet investors to promote green bond issuance in Europe and other infrastructure investment opportunities. More will be available on our website. The challenges. Well, we have an investor perceptions gap in both countries. For example, in India, domestically, as I wander around meeting people in India, I find there is quite a lot of belief that the very ambitious target set by Prime Minister Modi, for example, for 175 gigawatts of new energy by 2022, will be met. Outside of India, I find skepticism usually. Is that a real gap? Who's right? The bridging of that gap will be important, getting capital to flow. We know that in both countries, and this is a real surprise in China, there's actually a capital availability issue. According to the central bank in their report they published last April, public sector capital will only be able to finance 15% of the enormous capital requirements of China's green infrastructure or green economy transition. They are looking to private capital to fill the gap, and they've explicitly said they're interested in overseas private capital as well as domestic private capital. Some of you may know that a couple of months ago, the government in China opened up the sluice gates for overseas investments directly into the Chinese market. That means, for example, that an investor in Japan can now go straight to a domestic issuer and buy green bonds in the Chinese market or to take other sorts of investments in a way that was very limited before. In India, we have a similar issue, as I mentioned earlier, where while there is a robust local market, at the moment it is seen to be inadequate to the scale of capital requirements of the green investment plans that the Prime Minister and the Indian government have outlined. So as a result, looking to overseas capital will be an important priority for the Indian government. In both countries, the cost of capital is an issue. In India, interest rates, inflation is very high. Renewable energy developers are typically having to pay 11 to 18% interest on capital they raise to build them. Given the high capital expenditure feature of a lot of the sort of green economy investments we have to undertake, rail and solar energy being two examples, that adds an extra impost, an extra barrier to taking a green route rather than an old-fashioned fossil fuel-based route. Coal-powered thermal power stations are cheaper to build, even though their running costs are higher over time. Solar farms are much more expensive to build, but they have zero running cost. But when you're looking at 14% interest, for example, over the 20-year life of financing of your solar farm, the interest rate alone can amount to 2/3 the cost of the whole project. These are very challenging issues. Addressing the cost of capital in India is important. In China, we have a similar problem, curiously enough, where there is reasonably low-cost capital available for state-owned enterprises and preferential borrowers in the Chinese economy. But there's a whole class of green economy project developers, such as wind and solar, who don't have access to that lower cost capital and actually pay punitive rates of interest. Providing a means for them to reach overseas will make a big difference to them being able to carry out their plans. In both countries, we have for overseas investors a real worry about foreign exchange risk. In India, the cost of paying for a foreign exchange hedge, a swap, would be somewhere between 6.5% and 7%, depending on the period of the year. These add significant cost to overseas issuance. Bringing that down, or rather moderating that, will be a huge challenge in the coming year. This still applies in China, where there is significant investor concern about the potential depreciation of the Chinese currency. And as a result, foreign exchange remains a challenge. There are a number of moves afoot to address it. We'll see. There's also domestically a simple lack of understanding by developers and issuers about what is green in both countries. Work needs to be done to address that. There is a difference in China, notably, between domestic and international definitions of what is green. The Green Finance Committee, endorsed by the central bank, the PBOC, has come up with first draft of definitions, which includes some areas that wouldn't be of comfort to European and US investors. Without going into the arguments one way or the other, the more we can achieve a harmonization between international and domestic definitions, the easier it will be for international investors to participate in domestic markets. In both countries, there is a real need to grow the pool of local verifiers and reviewers to ensure that the model of getting independent and separate review of the green credentials of a bond can actually be followed through on. In China, the PBOC has recommended second opinions or certification in its regulations. We now know that privately they demand it. We know in India this is now becoming established as a norm, slowly but surely. On that note, I'm now going to ask Yousuf Syed from Axis Bank, Treasury and Debt Capital Markets, who's on this call, to join us for a short discussion on the potential for green bonds in India. Yousuf, are you there?
Yes, hi. Thank you, Sean. That was a good presentation, and it quite very well reflects my sentiment. I think you highlighted about a number of challenges which India faces, and I would like to add a few other things, including problems with regards to water, land use, and waste management. So there are a number of areas in which India requires investments, and I think we are probably a generation behind us in terms of investment, and this investment needs to come now before we have, significant challenges for the next generation. However, the key challenge has been that despite over 3/4 or maybe even 4/5 of the total financial investments in the country going into the banking sector, the banks are getting increasingly challenged to support further investments into these areas. And that increases the relevance of the fixed income market. And that's in that context, I think the work done by some of the pioneering issuers and organizations like yourself and FICCI are quite admirable. I was speaking to a developer in Bombay the other day, and he was explaining to me that how he went around struggling to get financing for LEED gold certified building, and he wasn't even aware that there are investors who would have been keen to either finance or refinance a bank who provided liquidity for a developer like that. So there are two broad challenges that we have. One is a need to access the liquidity outside India, and second, to make the local corporates and other investors understand the appropriate way of accessing the international market. In my opinion, some of the recent efforts made by the government, made by the industry bodies like FICCI, climate bonds, the London Stock Exchange, etc., are quite admirable. My feeling is that the offshore INR, or what is called the masala bond market, is possibly an ideal instrument. So a green masala bond would really be attractive from the perspective of a lot of issuers, a lot of Indian corporate issuers, because they cannot always go and raise a benchmark size of $500 million issuance, because they may not necessarily have projects which can immediately consume liquidity of that size, and the cost of hedging the foreign exchange, as Sean mentioned, and the volatility of the FX could also be a significant hindrance. It is unfortunate that that market has had some difficulty in starting itself, but we are aware of a number of issuers who have expressed keenness to look at that market for generating a refinancing for some of the projects as and when that market develops. A number of other opportunities which we see immediately likely to come into the market could be from companies who are taking a lot of initiative, like EESL, which is a government-promoted company doing significant amount of work in reducing the carbon footprint. We do expect some of the banks to continue to tap in, but I think this is just going to be the tip of the iceberg.
Yousuf, you're pretty bullish then about the opportunity for green bonds.
Absolutely. I do see that once we are able to overcome this initial hindrance, I think there would be a spate of issuance possible from the domestic issuers. And I think the market would see real development when we see the corporates trying to tap the market and not just the financial institutions for refinancing purposes, as is the case that we see in the domestic market, where about 95% of the issuance is by the corporates.
So that's very cheery. Thank you. So stay on the line for a minute, but thank you for being able to join us. Axis Bank, for everyone, information is one of India's largest bank and have been a pioneer in many areas of investment, including microfinance for renewables. Kajetan, are you on the call at the moment?
Yes, I am.
Yousuf just mentioned EESL, Energy Efficiency Services Limited. Of course, we went and visited them recently. Tell us about what you found. It was pretty amazing, wasn't it?
Yeah, I mean, I think it's a very interesting company. It was set up only 2 years ago by 4 publicly owned finance institutions in India. It's effectively an ESCO, a very large ESCO model that also recently received financing of roughly half a billion dollars from AFD, ADB, KFW, and also some line of credit from the World Bank. The projects that it's working on are very significant in terms of scale. So, for example, they have an LED project where they purchase LED light bulbs in bulk, allowing for the reduction in price, and they've actually through their purchases reduced the price from roughly $12 per light bulb to 50 cents. And they have a project of deploying 770 million of these light bulbs in the Indian market, where they just pretty much sell them at a discounted price, but at a profit. And this project in itself is aimed to save roughly 20 gigawatts of power demand, which is equivalent to the 20 average-sized coal-fired power plants. And the project will only cost $1.2 billion, which is roughly 8 times less than actually building those power plants. So,
wow, that's amazing.
So you can see that actually energy efficiency is seen as a way of driving increased energy access, because it's also faster to create additional capacity on the grid than build new power plants. And actually, the price of power has been going down in India, in part due to the energy efficiency initiatives that the government has employed. Another, I guess, project that they're working on is working on targeting the energy efficiency fans, deploying energy efficient appliances like refrigerators and air conditioning units. And in those cases, they have a contract with the DISCOMs, which is the grid operators, where they effectively lease the appliance and receive payment in return through the energy bill, through the utility bill of the consumer. So that's a very interesting model. And they also have projects with municipalities on street lamps that are of similar scale.
So if I can just cut in there.
Yep.
So Yousuf, these folks are a client of yours, aren't they?
I'm sorry?
EESL. You do some work at the EESL, don't you?
Yeah, we do. We do know them well. We are one of their main bankers. In fact, as we speak, we are working with them. They have offered us certain solutions, and we have given some of our own infrastructure to them, wherein they are running certain pilot projects to reduce consumption of the electricity in our own business. So they are a very interesting company. You have to understand that in India, the constitution prohibited Indian municipalities from borrowing. So none of the Indian municipalities have any debt outstanding. And when you have gone through a certain phase of development where these entities are required to invest for certain social benefits, they have to kind of dip into their tax revenues and other revenues from which they generate from their municipal budget. EESL is doing a pioneering work by going and offering these municipalities where EESL will do the investments and the municipalities will will pay as they use. I think that's going to be a significant game changer if they're able to execute that very well. And I believe that when they develop scale in that activity, they would have substantial amount of financing requirement for long-term financing to support the activities at these municipality levels, and we've been trying to help them to structure their long-term financing requirements as well. So I think it's a very interesting company and an interesting business model there.
So we're certainly hoping we're going to see some green bonds out of EESL. And thank you, Yousuf, for being able to join us on this call today, everyone. Thank you. Axis Bank is a key part of the solution. But there are also many others. I mean, it's interesting that we find IDBI has programs, Yes Bank has programs, I11S has programs, the state of Andhra Pradesh, the state of Maharashtra, the state of Gujarat have programs of equal scale. And so we have enormous opportunity for things, especially in the refinance stage, that could be applied to raising capital with green bonds. So this is what we see as the opportunity in India. However, there's work to be done to bring them all to market. We have this is the same challenge, but it's a different challenge in China. In China, we have a situation where the government has effectively asked banks to issue green bonds. And so the starting point of that market has been people like Agricultural Bank of China or Shanghai Pudong Development Bank issuing bonds against existing loan portfolios or forward investment plans that they're doing anyway. So this is not quite as granular as EESL coming to market, but is giving us bulk and liquidity. And remember what I said earlier about the benefits of liquidity on secondary market pricing. This will be an important step to helping drive some kind of modest price benefit for primary issuers in the absence of incentives at this particular stage. Pamela Stenger-Tietke on the call has asked, corporate issuers have grown in the market globally. What's the outlook for these issuers in emerging markets? I guess my answer to you is I think the outlook is very, very strong. I think in India, of course, we have some grey areas between partially government-owned banks and organisations, or EESL, that's actually a government-owned body, and private. But these are all entities that operate as corporates, and we expect to see the bulk of issuance from that particular sector. In China, we're already seeing with things like BAIC and Concord Wind and Golden Wing green corporate bonds appearing, and of course green bank bonds are effectively corporate bonds as well. So the outlook's very strong in both these particular areas. I'm actually going to now switch to China for a minute before we wrap up. Lily Dai is the person who runs our China desk. Lily, just in terms of the scale of issuance coming through and Pamela's question about the potential in the market, tell us what PBOC said about applications on their desks.
Hi everyone. So PBOC has prediction that this year China is going to issue 300 billion RMB green bonds. That is around 46 billion USD. So through our meetings last month with key regulators in China, including People's Bank of China, NDRC, and NAFMI, so there are a lot of coming up issuance from banks as well as corporates. So for instance, the Bank of Communications just announced they're going to issue 70 billion RMB green bonds this year. That is around $10 billion. And the Xinjiang Goldwind, the renewable energy company, the first company issue green bonds in China, they are also going to issue green bonds this year.
So we've got quite a lot coming through.
Yeah.
We also, I think we have Shanghai Stock Exchange considering a green bond listing, don't we?
Yes. So in their guidelines published in March, they announced they are going to do a green bond listing in Shanghai Stock Exchange, just similar to the one in London Stock Exchange. And when we look at the index just published by CCDC last month, I think Sean has mentioned before, actually there are a lot of unlabeled green bonds. They are already issued at Shanghai Stock Exchange.
So we're actually getting quite a lot of interesting developments in the market in China as well. It's very interesting times. I'm now going to ask for final questions before we wrap up today, while I'm leading you through a couple of last slides. In both the Indian and Chinese market, the Climate Bonds Initiative, as some of you will know, runs a climate bonds certification scheme, and we'll be rolling out those schemes in those markets. We have a number of verifiers active in both markets already. For example, the Hero bond that was issued in India earlier this year was verified by KPMG and certified by the Climate Bond Standards Board. We've recently announced the appointment of Zhongkai and Sintao Green Finance in China as approved verifiers, and EY has already been operating there under the Climate Bonds certification scheme. Our goal is to provide a trusted source of reviewers and verifiers at scale as quickly as possible in both markets to support local issuance, to keep the cost down, and to make it easier for people to get help to figure out what is green and what doesn't green, and to educate those parties. There'll be many education activities coming through as well. Certification is very simple. It's as simple as identifying qualifying assets, getting a verification, and then tracking and reporting. It's as simple as that. We've also launched, as I alluded to earlier, a green infrastructure investment platform, which is about promoting green bond issuance in international markets. As Yousuf said earlier, getting access to international markets for Indian issuers, and PBOC has identified this as relevant for Chinese issuers too, is an important part of the story. Our first event will be on the 30th of June in London, and we hope to have Yousuf there, in fact, speaking about Access Bank's plans, which will be promoting investment opportunities in India around this green theme. If you're an investor who would like to participate, please do contact us. There's much more information available on the Climate Bonds website than I've said now. Now, can I just ask Kajetan and Lily if there are any other questions that people are asking us that we need to answer before we wrap up today?
Yes, we have one more question from Ellie Chachawa. Sorry if I mispronounced the name. How do we deal with the case of green default? Are there any interesting initiatives, ideas out there for how to design penalties for issuers that don't verify their green requirements?
That's an interesting question, and a question that's been raised by many parties. I think at the moment in the market, we largely have issuers, and this applies to China and India as well, who have significant reputational investment in ensuring there isn't green default. And that is, if they do default in some form or another on their claims, then they are likely to find it much harder to raise a bond the next time they go to market. And that's a significant disincentive. And that's the case globally. As a result, this has been an issue which has not been urgent to address largely. However, as we move down into less informed issuers or higher yield issuers where there may be more risk of cutting corners, and we have already seen a green default from a property developer in the US who changed their mind about their green capital investment after issuing the bond, then it does mean that we will need to do something in this particular area. The first thing, though, is just to get monitoring and review done. It's clear that if people are following the PBOC requirements and the NDRC requirements in China, and the Green Bond Principles guidelines, which are voluntary guidelines, then they should be reporting regularly, monthly or quarterly in the case of banks in China, about the state of their bond, does it still comply. These are important measures that are required. At the Climate Bonds Initiative, we do chase up everyone, and as later this year, we'll start to publish online reviews of all annual monitoring or annual reports from green bond issuers so that people, investors, can arrive at a view about the level of compliance, the adequacy of compliance with these rules. In the long run, some people think that there may need to be some sort of penalty or default provision in the covenants of bonds. We're dubious with investment-grade bonds, but having spoken to some high-yield issuers, they've generally been very open to the idea of penalty arrangements, such as an interest rate ratchet up in the case of green default, if that gives investors more confidence to take up the bonds. So this is a discussion for the industry to have in the future. In China, this might be allied to incentives. So when the government, as it plans to do in the new year, brings in incentives for green bonds, tax benefits, they might tie that with penalty arrangements of some sort to ensure compliance is followed through. This is very much a question open for discussion. Please keep asking, no simple solutions. I've just had a comment from Nisreen Kaduri. I forgot to mention Vigio, and I certainly did. My apologies, as another second opinion, or rather I should say verified under the climate bond standard. The list I've provided on this website is not the full list. There are many more on our website. And that grows day by day. We approved 4 new verifiers last week, for example. This is a globally managed scheme of verifiers where people have to apply, have to show competence, and have to renew their verifier status on an annual basis. Please do look further on our website if you'd like to know more. Any other questions, Kajetan?
No, not at this time.
Okay. I'm going to wrap up the session now and say thank you very much for Yousuf in particular to join us, and from Kajetan, Lee and Johnny. Thank you everyone on the call for joining us. It is clear that we've made a roaring start to the Chinese green bond market and a very healthy start to the Indian green bond market. The potential would seem to be very large in terms of the assets and projects that need capital and that could potentially use the green bond theme, such as EESL in India, not to mention various in China. We think there is a very strong possibility that the PBOC estimates of 2016 green bond issuance will be met, $46 billion equivalent, which would be more than the total local green bond issuance last year. It's worth noting that if Indian Railways or China Railways or both were alone to enter this market and label their bonds in a manner consistent with the international guidelines around doing so, that alone would add hundreds of billions of dollars of outstanding to the market and certainly tens of billions of forward issuance. For that reason, we can get to a reasonable level of issuance very quickly with effectively repackaging issuers who are currently undertaking investment, increasing their investment, let's be clear, but have the capacity to issue bonds. The hard part is when we see this market helping issuers who haven't had a chance to tap this market before. So whether that be distributed solar in India, whether that be smart cities in Western China. This will be the hard work once we get beyond the early stages of growth. But I can tell you, we're fairly confident the early stages of growth will see $50 to $70 billion of issuance out of the joint Indian and Chinese market. And that'll be an enormous fillip to a global green bond market and a firm foundation in terms of liquidity, ecosystem of suppliers, and awareness to allow that next harder stretch to be tackled. Thank you very much for joining us today. Keep watching this space. It's very exciting.